is to focus on, kind of analyzing using IVolLive and then taking a trade or potential trades and running that through the P&L profit and loss calculator. So that's our goal today. That's going to be our focus. On these Tuesday sessions, we tend to focus on one of these tools, whether that's IVolLive, sentiment analyzer, P&L calculator, or real-time spread scanner, or even data download. So here we go. A few more people joining. Perfect. Great. Welcome. If you guys just joined us, welcome. We're just kind of kicking off here. Today, we're focusing on the P&L calculator. So, on these Tuesday sessions, we tend to take a deep dive into our tools. We focus on one, but what I like to do is show how they all interact with one another. So today, our goal will be, finding a potential trade using IVolLive and then running it through the P&L calculator. I'm also going to show a shortcut P&L calculator on the real-time spread scanner that a lot of folks don't know about. So we will be featuring that. So I just logged in right before this webinar so you could see what the experience looks like from a user standpoint, especially if you just joined us. You'll be greeted by our friendly concierge here. We'll welcome you to IVolLive. You'll see the different tools, shortcuts that you have here. So again, we have IVolLive, which is kind of like the beating heart and brain of our platform. Stock sentiment analyzer, which measures obviously stock sentiment, which is a very important driver for price movement, and IVX, implied volatility. P&L calc, which we'll focus on today. A real-time spread scanner, which we just did a 3-part series on, and then data download and daily updates. So here we go, just little, shortcuts. You can always, expand, contract by clicking on those chevrons, just, quick little UI user interface hacks. And then for anything, we're always available at support@ivolatility.com. So whether it's related to IVolLive or, specific data needs, we are available at support@ivolatility.com. So here we are. This is our dashboard. Our live webinars, which is what you're on now, just click on this button and make sure you reserve your spot for these webinars. Our next one's going to be on stock market sentiment. So I'm going to briefly show the sentiment analyzer today, but you're going to want to register. We only have 100 spots available for each webinar, so you want to register in advance to really look at that tool. It's a very, very powerful tool. So here we are on our dashboard. That's how you would register for upcoming webinars. Here you have the latest news. So this is running 24/7, 7 days a week. It gives you a quick little sentence or two on, what's going on in the market. So we have some stuff on the Gulf, merger with Live and, PGA, and then, some things going on in Turkey. So it's a really cool, this is like what I like to read while I'm sipping on my coffee in the morning. We have our market news and research. This will give you other interesting ideas too, because here we'll talk about the things we're looking at, interesting trends, interesting names, interesting potential trades. We wrote about Tesla in our last one. We put these out typically every, at least once a week. At least once a week we put these out, and we kind of demonstrate the things that we're most interested in, the things that caught our attention. So this is a really, really good place to go to get some ideas. Sorry, we have a few more people hopping in here to join us, which is great. So in our last market news, we wrote about QQQ. We also wrote about Tesla. We also put out on Monday very exciting news that we just added the B3 exchange from Brazil. So for today's example, I actually have a name in mind that we'll cover. But if you didn't have any trading ideas, these are good places to go. Under the latest news column or under news and research, and then also IVolLive. So when you come to IVolLive, this is, again, like your giant brain for the platform, because what you're able to do here is you're able to run scans and find interesting ideas, or, you can already have an idea in mind and take a deeper dive. And then once you kind of have your analysis done here, from here, you would then take it to the potential trades, to the sentiment analyzer, and then the P&L calc. So it's kind of like, imagine this is in order. Dashboard gives you all your updates that you need. IVolLive, you do some research. Sentiment analyzer, you double check the sentiment on the underlying stock you're interested in. And then P&L calc is where you go to run the scenarios, and then if you want to take it to an advanced level, you go to the real-time spread scanner to run that stock against 8 or 9 different spread strategies. So I'll briefly touch on that at the end because there is a really cool kind of mini P&L calc built in there. So here on IVolLive, you could see our big news this week is that we had added B3. So this is the largest stock exchange in South America. It's located in Brazil. So you can see the names here are some of the largest names in South America. Many of these trade internationally as well, here in the US, some in London. So the name that caught my attention today that we'll use to demonstrate is called Vale, V-A-L-E. So you'll see in Brazil, they have different nomenclature for how they name their name. So if you happen to be, a trader and you love trading on the Brazilian market, we now have that available. One of the names I've traded in the past that's located in Brazil is Vale. And I thought they make an excellent example for today's webinar. But this is where you would go to, run your different scans, not only on the Brazilian stock exchange, but you could see we have all of these different defaults, and I know that question came up, well, what scans or what groups can I run scans against? Well, we have all ETFs, all US indices. We have Brazil, we have Canada, we have, Germany, the DAX, we have the Dow, we have European stocks, we have NASDAQ, we have India, over in Asia, we have the Russell 2000, we have TX60. And then we also have these little defaults, top 200 names by options volume, top 200 names by open interest, so depending on, what the indicators you'd like to look at, we have these default groups. You can always screen by all instruments, which will be alphabetized until you start sorting by the columns. And then we also have breaking out, collapsing, high call volume, high put volume, highest call to put, and highest put to call. So again, this is great if you don't already have a trading idea. So I already have, Vale as our example for today. But if I didn't, I could run these screens, and within 5 or 10 minutes, I would have a handful of ideas. I'd come here, I'd create this new group, July 11th ideas. I would hit save. And then again, in some of my past webinars, the viewers have seen me compile a list of like 10 names just by running some of these scans, top stocks by volume, implied volatility mean versus 20-day historical volatility. So future versus past, IVX historical range. This is like a 52-week range, on the IVX for a stock. And then IVX change from yesterday. Where's the action happening day over day? And so I've done in past webinars, again, created a brand new group within about 10 minutes or so, just by running these scans against these various, stock groups that we have. So let me let a few more people in here. So once you have the name that you're most interested in, you can, either click on it here or key it in. I've already keyed in Vale, but this is a great example. So depending on if you were based in Brazil and you were trading the Brazilian market, you'd want to click on this, the Vale 3-E, because this shows you the exchange that it's on, PVMF, right, which is the B3 exchange. Now, if you're located, let's say in the US, like I am, I click on the US symbol, which is here, NYSE. And I hit add, and you can see Vale appears. And what we're looking at is on the left, this is the fundamental information. So this gives us the underlying stock price. This gives us, the bid ask. This gives us IVX. So this is like what I was just showing on that prior screen. This is the IVX 30, 38.12. One of my favorite screens that I just showed was IVX versus historical volatility. And so I can easily size that up here. And I can just tell at a glance that Vale's IVX is 38, is about 10 absolute points higher than its historical volatility. So that's interesting. And we'll look at that further on this chart. And then we also can add different, fundamental criteria here. So if you're a fundamental trader, some of us are fundamental, some of us are technicals. I'm both. I'm 50% fundamental, 50% technical. So you could come in here and you can just add the different criteria. Like if we want beta, how correlated is Vale to the S&P 500. We can have change percentage, We could have dividend information. If I hit apply, this will apply only to this, tab. If I hit save as default, this will apply no matter how many tabs I pull up. So I'll just hit apply for now. And you can see that all of this is added. One of the interesting things about Valet, the reason why when I was running my scans yesterday and today it popped up is it's also extremely cheap. Look at this. The price to earnings ratio of Valet is only 3. So, the S&P is double digits. Valet is 3. Granted, there's operational risk. It doesn't operate exclusively in the US. It has some geopolitical risk, but still 3 is an incredibly cheap valuation. So that got my attention. The implied volatility over HV also got my attention. And so then I clicked on it and I really started analyzing it because I was analyzing the B3 market because we had just added that to IVolLive and made that announcement. So from a fundamental side, I was interested. And then I came over here to the technicals. Let me get my scroll bar kind of up here. So I came over here to the technicals. We have up to 5 years worth of data available as an IVolLive user. And so that was another question that came in. How much is available on the charts? So we have up to 5 years of spot price data available, which is this blue line. We have 5 years of implied volatility data, which is this green line. And we have 5 years worth of historical volatility, which is this orange line on our charts. So this is the first charting view I go to, but then when I dive deeper into a name, a lot of times I'll come to the actual charts tab, and we have 8 different chart types that you can choose from to really dive deep. But standard lock, stock, and barrel, we have 5 years worth of data, by default. So if you're a long-term trader looking for long-term trends, you could analyze this. You could say, okay, Vale had a peak at 160 and it's nowhere near that at its current price. And then here's the support level. You can look at the trends. When Vale had this giant dip down during COVID, it looks like this is 2020, March 2020, implied volatility and historical volatility, spiked. So this shows the inverse relationship, right, between price and implied vol. So those are all good if you're maybe a big macro trends trader. I tend to like the 1 year view and below, because this tells me a lot, right? We had this big peak in price. So I've got some charts prepared, but for now in real time, this is how I would analyze. This. We had this big peak, right, in price, and then we had this giant drawdown in price here. Because price is blue. So you've got this pyramid, this sharp rise followed by this sharp fall. And as we come here, we could see as price has been going down for Vale, implied volatility has been rising. So another thing, if you've been on one of these webinars before, that I like to see is this discrepancy, this divergence in implied volatility and price, because either this is going to continue or it's going to meet in the middle and there'll be a kiss. So there'll be a reversion to the mean. So in addition to Vale now being very cheap stock, right, because it's come down, its price to earnings ratio at its current price, here is price, around $13 is only 3, a price to earnings ratio of 3, which is incredibly cheap. That means with the earnings Vale is putting out currently, those earnings would amount to the share price in only 3 years, right, which is incredibly cheap. So this is what I like to look at price. I like to look at, what's happening with price action over the past year. But other things I like to look at from this view, I already kind of prepared this chart. What you can do with the IVolLive charting tools is you can isolate implied volatility. Remember, implied volatility is this green line here. This is IVX30. And so this is Vale's, you can see I'm on Vale right here. This is the IVX. And you can see what's interesting about Vale at current prices is its implied volatility is in the sideways channel, right? So something's going to happen. It's either going to break out to the upside or break out to the downside. And if implied volatility goes up, that will correspond to Vale's price going down. If implied volatility goes down, that will correspond to Vale's price going up. So for today's P&L calculator, I thought it'd be neat if we ran a few different scenarios, a bullish scenario, a bearish scenario, and then we'll look briefly at the real-time spread scanner, and I'll show you how to run bullish and bearish scenarios there and click on a mini P&L. So this was also very interesting to me, the sideways channel, because this means it's going to break out one way or the other. Some other interesting things that I noticed that I had pulled up. This is another good example. You can have multiple browser tabs working with IVolLive. So a lot of times I'll have a chart set up on price, a chart set up on implied volatility, and applies maybe a chart showed pulled up maybe on historical vol, and I'll have all of it kind of saved, so that way I can just toggle between the two. But here I'm putting together my trading thesis, which is implied volatility won't remain range bound. Vale is extremely cheap. Of course, a cheap stock can always get cheaper, but it can also rebound and go higher. So from this point, I'm interested in I've confirmed my fundamentals. I've kind of confirmed my technicals. Over here, speaking of technicals, I've got the Bollinger Bands here. And so the way to add technicals when you're doing this analysis, you can just hit technical or this indicators tab, and then you can add Bollinger Band, you could add relative strength index, which I did, but you can choose in alphabetical order, any of these indicators you want to add. But I like these two because it's a very simple visual to tell me what, help me predict what's going to happen in the future. So one of the things that I think is going to happen is we could see on this last chart here, this is price, support, Vale's had support. Let me admit a few more. Vale's had support here around like the $12 to $13 range has tended to be the low for Vale over the past year. So this $12 to $13, this is what stands out to me as a good potential trading range, right? Because this is, even when times are bad for Vale, they tend to not get much worse than $12 a share. So this was very interesting to me. So I jotted down, $12 to $13 for potential strike prices. Once I have potential strike prices, I come here to our options chain view, because now it's about, okay, how do I design a trade? How do I design an interesting trade, right? And for Vale, the theory here is that it probably won't get much cheaper, but there's a chance, there's always a chance it can. So we could make a neutral bet, a mildly bullish to neutral bet, which would be selling a put. We could make a bullish bet, buying a call. We can make a bearish bet, if we think the downtrend will continue, by buying a put. And then we could also go mildly bullish by buying shares and selling a covered call. So there's a bunch of different scenarios that we could look at. And before I dive into specific options chains, what I like to do is I like to quickly go to Sentiment Analyzer, because sentiment does move markets. It moves stocks as well. I click on stock sentiment analysis. This is a nice little teaser for next Tuesday, because we'll be doing focusing on the sentiment analyzer next Tuesday. But you can see here, this gives me a really good snapshot on sentiment for Vale. And if I'm in a rush, I kind of just skim this top here, and this tells me that right now we're in a strong bearish trend. We're on a bullish rank and a volatile rank. These range from scales of negative 100% to 100%. So negative 50, we're kind of in the middle. And then we look at the buy, sell, hold signals. A question mark signifies hold. A red arrow signifies sell. And so you can see with Vale, we don't have really a lot of bullish momentum when we look at price action, when we look at the historical volatility term structure. There's a high call to put trading ratio at 2.86, which actually means traders have been buying a lot of calls, betting on a turnaround. So what this is saying is, hey, look, traders have been loading up on calls, which means the stock could be, potentially overbought. So worth looking into. And then this is really cool. If you're not really familiar with technical analysis, this gives you a snapshot of three of the most popular, which is the EMA, exponential moving average, which here is slightly negative. Here's the EMA. So you can see this is the price plotted against the moving average. And so this is, slightly negative. And then we have the RSI. The 14-day RSI is the most common measure used. So we could see that here's the RSI. Vale's, kind of in the middle, but towards the, trending lower. And then we have the Chaikin money flow indicator, which is showing us where the volume is, right? So the money flow fluctuates in these big waves. And right now we're coming off a slightly bullish wave, and now we're into a bearish money flow pattern. So a lot of selling happening. Down here, we have, while we're down here, we have the basic fundamental data, for Vale. So this is giving us our price data. If there's a dividend, it will tell us here. And then when it's paid, and then we have correlation to the market. So you can see Vale is not really correlated to SPX or to the Dow or to the NASDAQ. So, not a lot of correlation there. And then we have our different historical volatility and implied volatility, looking 10 days in the past, 30 days in the past, 60 in the past, 180, what those levels were, and then looking into the future, and this is where we could see the IV index is, a bit higher looking ahead than it was in the past. So, when I come to the stock sentiment analyzer, this isn't the end all be all for me, but this influences my trading strategy, right? So we have a stock that's been bearish, but it could turn and it could turn bullish, or it could continue bearish, but it's good. I like to use this to help, decide what I want to look at on the options chain, because once I'm on the options chain, I'm going to start jotting down specific trades that I want to run through the P&L calculator. So moving right along, as we scroll through here and we're looking for actionable trades, now we need to start looking at price action. We have calls on the left, we have puts on the right. So if we want to sell a put, which is again mildly bullish strategy, we need to have enough premium to be worthwhile. So for an example, this $13 strike price that expires on July 14th, which is this Friday, this would only pay us 3 cents. On the other hand, if we bought it, it would only cost us 3 cents, but we would need, if we bought this put, we would need Vale to go below $12.97 by Friday to break even. So buying options outright can be risky because you have to get the direction, the timing, and the magnitude correct. That's why so many novice options traders lose money when they're buying puts or they're buying calls, because you have to get all three of those right. When we're selling it, it's a little bit different. We just need, if we sold this 1350 put, we would just need Vale to trade, at 1350 or higher for us not to be put, and we'd earn this 18 cents per share. So $18 per contract, but still that's a little bit of, that's not really worthwhile. So what I like to do with a company like Vale that has a low nominal share price, I like to look about 2 months out, see what premiums are doing there. Cause any trading thesis, that sideways channel that we looked at, over here, it could take, my experiences, it could take, 2 to 3 months to play out. So if we come back here and go 2 months, we're in July, let's go to September. So September 15th, 2023, we could see our kind of our near the money middle strike price is 13 a share, because Vale is at 13.48 a share right now. And we could see now that we've gone further out in time, the premiums are better, right? So if we're buying, it's going to cost us a bit more because of the time value. If we're selling, it's going to earn us a bit more because of the time value. So, if we look at this $13 strike, let's run through a couple different scenarios, and then let's jump into the P&L calculator. So one of my favorite tools you can use from this view here, there's a few of them, but we have our time skew chart. So this is showing for this specific strike, the Vale 13, this is showing the implied volatility measure. Put is in blue, call is in green. So you could see the puts as we go, especially 45 days out, have a higher implied volatility than the calls. And this is really cool because it shows you where the market makers either see discrepancies or where they see action, and right now they're pretty tight, looking, 10 to 3, 10 and 17 days out, but they really expand, which is typically in line with an earnings date, here, because, earnings go either way. So this is a really great chart to pull up to see. I'm looking for massive discrepancies between calls and puts. So this is interesting to me, 45 days out. The other thing you could do from this options chain view, sticking with the $13 strike, is you have bid, ask, last price. I just like to go ahead to last price because, bid and ask are great, but last is the judge, jury, and executioner, where trades actually happened at this strike, the 13 strike. So this is showing us price and then versus time here on the horizontal axis. And then table, which is also really good because table shows you where actual money is trading hands, the bid and the ask for this specific strike, the implied volatility level, and then how many contracts traded. So you can see Vale has been, it's had these $500 blocks like clockwork throughout today, which is very, very interesting. So I like to go there, and then I come here. This is the last step before I go to the P&L calculator. I come to the probability calculator, and here what I like to do is I like to say, okay, here's the expiration I'm interested in, September 15th. That's 66 days from now. I'm looking at this, this $13 strike. So my symbol's over here, and I like to say, all right, what's the likelihood that Vale will be trading below 13? So that's my price one. And then I like to use a higher price for price two, because if we do go bullish, what's the likelihood that, Vale will be trading above 15, for an example. And this helps me when I'm analyzing trades, because I could say, all right, there's a 62% chance that Vale will be below 13 by September 15th, which means if I sell this put, I better be comfortable buying shares at 13, because there's a 62% chance, I'm going to be put. On the other hand, if I buy this put, there's also a 62% chance that, Vale will be below 13. So when I go to the P&L calculator, I can use that as part of my math and say, look, there is a chance this thing will be lower than 13, but I don't need to pay too much for that put. So what does my P&L look like if I go bearish? So we'll get to that in a moment. And then there's only a 10% chance that Vale will be above 15. So it wouldn't make much sense for me to spend a lot of money on call options, because it's a very remote chance that Vale will go higher, enough to make a profitable trade by the 15th. So probability calculator is another one of my favorite tools to use before jumping over to P&L calc. On the left, we can play with a lot of these in P&L, calculator as well, but this is just like a quick little shortcut, because here you could see the strike price, you could see the expiration, you could see the implied volatility levels, the current interest rate, dividend date. You could play with all of these, but I'm going to go ahead and do that in the P&L calc, since that is the heart of today's presentation. And I want to show you guys now that we have a trade in mind. I'm going to show you about 5 different trading scenarios using Vale and using the P&L calc as our compass. So our first thing we'll start off very simple. We'll scroll down to our September 15th, 2023 expiration. We are here, September 15th. We were looking at puts. Let's go ahead and click on this. And then you can see that populated behind me. So here's what we're looking at. The first thing you want to do is you always want to double check your trade. Make sure this is the trade that you're going for. So in this case, our action is we're selling to open the September 15th $13 put. And we're selling one contract, and we're selling that for 65 cents. So $65 per contract. Here's the current implied volatility for this trade, 35.22. Here's our delta. So for every $1 move in Vale, this option will move around 40 cents. Here's our gamma, here's our theta. So this would be our time decay. And here's our vega. So how sensitive this is to changes in the implied volatility. So before we toggle with those fields, here we also have graphically the trade. So the blue line is our break-even point. Green is obviously where we're profitable. Red is where we're not. So if we're selling this put, we want Vale to stay where it is or go higher. We don't want it to go lower, because that's when we start showing a loss. The different things that and this is that kind of codified in table format. So we have our stock price on the left, and we have our P&L on the right, and we could see, where we'll make our max profit. And then here, obviously, we'll be experiencing losses the lower that Vale goes. Other cool things that we can do here, we could play around with days to expiration. So we can, change this and say, well, what happens when this is, 40 days out from expiration? What does this trade look like? What happens when it's 20 days out from expiration? What happens if, none of the trades don't happen in vacuums, right? So what happens if volatility goes up 10%? So look, we're at 35.22 now, but what if implied volatility goes up 10%? We're at 45.22, right? And so all of this will update in real time. It's really, really cool. You could also say, well, what if we did 10 and then we could, let's say, reset, and we could say, well, what if we sold 10 contracts of this particular trade, and what if our broker got us a better price? Instead of 65 cents, got us 75 cents. So all of this will update in real time, which is very, very valuable. So this was, if we wanted to sell a put And then again, we toggled between, changing some of these different scenarios. Then we could say, well, okay, what if we want to go bearish on Valet? There's a couple different ways, a couple different shortcuts. One way you could do is just invert the chart. So now you could see this is a bearish bet. So we're earning money as Valet goes down. We're losing money as Valet goes up. So that's here on the chart and here in the table. You could also come down here and go sell or buy. And then the other things you could do is say, all right, well, let's say we don't want to do puts at all, and we want to change this to a call. So if we have a buy September 15th, $13 call, this means we're going long. We're going long Vale, and you can see the delta is pretty high because we're at 60.15 because we're already in the money. Vale is at 13.47 and we're buying a $13 call. And here you can see this is where we're profitable. Here's our break even, and this is where our profitable. If implied volatility goes up by 20 absolute percentage points, so our IV is at 61.11. Here's how that impacts the trade. If we go down to 15 days to expiration, our little scroll bar will go here. It'll show us how close we are to the expiration at 9:15, and this shows us what our scenario looks like, with all of those different parameters. Now we could reset and say, all right, well, we want to sell the call, right? So we want to predict that Vale is going to stay below a certain price. 13 would be risky because we're already above that price, but let's say we wanted to go to 15, right? And we say, hey, our bet is that Vale will stay below 15 between now and September 15th. We're going to sell 10 contracts to make this bet, and we're going to earn 27 cents per share. So we'd earn $27 per contract. So it'd be 270 bucks, at 10. So you can see here, 270 at 10 contracts. And then this is a different bet, right? Because what this is saying is, we need Vale to stay below 15 in order for us to be profitable and to earn this premium. Otherwise, we're going to be assigned shares, at 15. And so this again shows us what that scenario looks like. The other thing you could do is, let's say we're still selling the call, but let's change this to a covered call trade. So let's say we're mildly bullish. We think, look, the sell-off is overdone. This thing's going to go sideways or go slightly higher over the next, few months. What we could do is we could buy Vale. We could buy the shares. Let's change this to 1 for right now, 1 contract. So we could buy 100 shares of Vale for $13.48, and then we could sell the September 15th $15 strike call for 27 cents. So what this is saying is we're going to give up any upside from 15 or above because we're capping our upside at 15. But we can make the spread 13.48 to 15, so that's like $1.52. And then we'll also make 27 cents. So if Vale is trading at 15 or higher on September 15th, our whole trade will be called away. But again, we'll make that $1.52 between 15 and 13.48, and we'll make the 27 cents. But what's beautiful about this is instead of having to do all that math by hand, it's automatically calculated for me right here. And it shows it graphically. The other cool thing here is you can look at delta on your covered call trade. So let's say you were trying to hedge your Vale position and you want it to be delta neutral. Just instantly, I can tell, instead of selling 1 contract with delta at 26, I could sell around 4. And that's going to get me delta neutral, right? And it's also going to make me, instead of just $27 per contract, I could sell 4 contracts, right, and quadruple my income. So this is where the P&L calculator gets really, really interesting, because it helps you not only analyze trades, but then further refine and tweak your trades. And what's also interesting is, you're not limited by 1 option contract or 1 covered call. You could actually have as many legs as needed. Let me move this, my scroll bar here. And I prepared a couple different scenarios. Let me just pull that up real quick. So here I prepared a straddle trade, right? So a straddle is simple. Basically, we have the same strike price, the same expiration. It's just we have a put and we have a call. We have a couple more people coming in. Welcome if you just joined us. We are recording this. So as soon as we're done with today's session, we'll have our team do their video magic, and then everybody will get this in their inbox later this evening or tomorrow morning. So we are recording this, but I just wanted to demonstrate you can do spread trades on this P&L calc. You can see we have our nice little smile here. And what this is showing us, if you're new to options, I don't want anybody to be intimidated. So I started off with a simple example. This is a straddle. So what we're doing here, always look at our action. So we're buying the January 19th, 2024 $13 put. So we've been using this $13 strike for most of our presentation today. So in this case, what we're saying is, hey, we're betting that Vale will go below 13, and we're willing to spend $1.24 for that. Here we're saying, we're predicting that Vale will go above 13 a share, and we're willing to pay $1.59. So what this is saying is, the reason why I chose a straddle, Vale is trading in a consolidating pattern. That's what we saw here. The IVX is consolidating. So it's going to break either up or down. We don't know exactly which, but it will break up or down. And so that's why we know a straddle could be a great trade, because this gives us till January 19th, 2024 for that action to happen, either a break higher, which would make our call here, the call leg, profitable, or a break lower, which would make our put leg profitable. The only thing that would be unprofitable is if Vale went nowhere. So if Vale remains range bound, what would happen is these would expire, worthless, and we would lose the money that we put in, right? To buy the $1.24 plus the $1.59. So we'd lose about $3, so $300 for putting on this trade if Vale just stays stagnant and goes nowhere. But if it moves, here we go. And then again, here you could play with the volatility figures, right? You could come here under advanced settings. You could play chairman of the board if you really desire, and you could change the interest rates. You could also change the dividend amount. So this is Vale's current dividend, but you could see, what a dividend increase would do to the options prices. Hit apply, and you can see there's a slight adjustment. So those are also really neat things that you could do with the P&L calc. So here you could continue adding options legs depending on what you'd want to do. Butterfly, iron condor, calendar spread. But I do want to show, speaking of spreads, where we have our miniature P&L calculator already built in. I had one prepared. Here we go. So here, what I did is I ran a long bull vertical spread. So these are all the different spreads that we have available. That last one I showed on the P&L calc was a straddle that I keyed in. But in this particular case, I ran a bull vertical spread, but you can see these are all the different options we have available. And we just did a 3-part series on this. I'll include that in the email that everybody gets. So it'll be a good refresher, especially using Vale as our example, which I have here. And then I ran the scan. And here's what was interesting. So I'll keep the strategy up. This is a bull vertical spread. So here, what's happening is we'd be buying one August 18th, 2023, $16 call. So what that means is, and then we'd be selling one August 18th, 2023, $17 call, right? So we'd be saying, look, we want to go long, but we want to defray that cost a bit, right? By selling one of these options. So with a bull vertical spread, though, you have the same expiration, and then you have the same expiration, and you have the same strike price as well. But once you get here, you can run, you can come here and you have a mini P&L calc, right? So what's great about this is, I'm gonna come here to the one I was looking at right here for Vale. And under this simulation, this is QQQ. One sec, let me run this scan one more time. So strategy, bull vertical spread, stocks, Vale, yep. Search, have this repopulate for me. All right, there we go. So here we have Vale, and we have our stock price, 13.51. This is telling us, how much this particular spread trade would cost. I don't want to really get into the weeds on that because, we covered it over the past couple of Tuesdays. But what's great is you can run this simulation here under risk scenario. Right now, time is on my horizontal axis, 10, 20, 30 days. And then the underlying stock price is on my vertical axis, right? So this is saying, well, what if Vale drops to 1081? What if it drops to 1216? What if it stays stagnant at the current 1351? What if it goes higher at 1486? And what if it goes higher to 1621? So what's great about this is if you enjoy trading spreads, you can key all of that in on the P&L calculator, like what I did earlier. Or what you could do is you could come here and you could run the scan and then click simulate, and this will show you. And we could see what our P&L looks like if the underlying goes to certain price levels. So this is kind of like a mini built-in P&L calculator that's also available to you within IVolLive. So that is just something I wanted to demonstrate. And then if you are brand new to IVolLive, and I'm going to put our link here. So if you're brand new to IVolLive and you don't currently have subscription with us, we do offer 7-day free trials. Once that free trial ends and you're done battle testing the program, you can choose between these different plans. The cheapest way to join us is always the annual plan, and that's basic, advanced, and you could choose kind of whatever the best fit is for you. But that's how you would actually register with us if you're not currently a user. So with that being said, and then once you do register, you'll just kind of go through this onboarding process, and then you'll be welcome to join us again for any of these webinars. Next Tuesday, we'll go deep into the sentiment analyzer. And then again, today we covered the P&L calc, and then, how to find a trade, which we used Vale, and then the different scenarios to run through the P&L calculator, and then a hack to get to the P&L calc within the real-time spread scanner. And that's what you'll find with IVolLive. There's always a couple different ways to look at the data and analyze and riff with the data. So that's what I wanted to demonstrate today. And Vale was our example because we just added the B3, Brazilian Stock Exchange. And Vale is one of the names that popped up to me when I ran those screens. And it also trades in the US. So it's a very easy underlying to trade, whether you're in Brazil or whether you're here in the US. So we're at 12:45. I want to pause now to take any questions. Please feel free to throw those in the chat. I just put the link to register with IVolLive in the chat if you aren't currently a user. So if you have any questions about the P&L calc or anything else, feel free to throw those in, and I will answer those. Or if this was so incredibly thorough, then that's always a good thing as well. And we can move on from there. Also, we always like to get feedback on these. So if you find these very helpful, if you don't mind writing to us at, let me key it in here, IVolLive.com. Thank you, Flavio. Appreciate the kind words. If you guys don't mind writing to us at support@IVolLive.com, tell us what you like. Tell us topics you'd like to see, companies maybe you'd like analyzed, different things. It's very helpful for us to get feedback, so we know what to focus on, on these Tuesday sessions. So any comments, feedback, again, thank you for the kind words. P&L calc is incredibly important. We're in this game to make money after all, and the P&L calc is superb at telling us our risk versus our reward. Well, great. Sounds like this was a good session then. Thank you for joining me. I know we're fresh off a holiday week here, so I wish everybody a happy catch up, happy trading. Please join us next Tuesday for Sentiment Analyzer. Until then, happy trading.